So people are starting to lose faith in the US dollar, and it would probably be more severe if the same thing wasn't happening around the world. So we know the Eurozone is basically doing the same thing, printing lots of money. Japan's been doing it for decades. So it's still relative, is keeping the dollar relatively strong. But gold is outside of all that, and we know gold is kind of manipulated by the Fed, or believed to be. I haven't researched enough to convince myself of that fact, but you hear it enough, and the way it does trade some days, it does make you wonder. But last week there didn't seem to be any constraint on it. It just sharply rose to 1700. And as I mentioned in my video last week, when they printed the money during Q1, we did see the gold prices double, triple. So we could see that again. That being said, I did buy a little bit more of Centera gold, which is SRU.UN-T, and it did start to move a little bit last week. But again, I don't know how much gold they are producing because of the coronavirus, and if their employees can actually work. So I have to look into that a little bit further. A better way to play it might just be buying like a gold ETF, but there is lots of people thinking now that gold will probably go through $2,000 an ounce this year, and then these mining companies, if they're able to get their employees to work, will have huge cash flows. Again, I'll probably just do this as a trading, because in the long term I do not like gold companies, as they typically mismanage the money that they receive during the good times. So what I can also bring up the price of gold just to so you can see here, gold last week was some pretty bullish candlesticks here. We've moved strongly above the 1700 area, which I mentioned last week, to 1752, and we're seeing what happened after 2009. We're starting to see the same thing happen here again. So gold of maybe even 2,000, 3,000, 4,000 would be possible, and they've actually printed more money a lot more rapidly than they did in 2009. This is the Fed balance sheet, which I've shown in the last few videos. We can see QE1 here, where they basically printed a trillion, and then it took a couple years to print another trillion, and a couple more years to print a trillion. Well, now we've seen, hard to see here, but we've basically gone from $4.2 trillion to $6.1 trillion in quite literally weeks. So the amount of money printing at this rate has never happened before, and there has to be consequences to that, because why not just give everybody $100,000, print enough money, and then the problem's over, right? So money is meant to be equal to labor or work performed, and if you've performed a lot of work or labor, then you receive that money. The money then you receive can be used on for retirement or for reinvestment. If you just create it out of thin air and buy bad assets, then you're totally demeaning what the currency is. And we go from a hard currency to an easy currency, and we've seen what can happen there. It can lead to hyperinflation, and the currency basically just being destroyed. Now that's probably not going to happen in the United States because it's still considered the world reserve. But I think inflation and other things will start to become emerge, slightly higher inflation in different areas. So that being said, I mentioned I did start, so gold's totally out of that system, and you can argue gold is going up, or at the same time you can say gold isn't going up, but the US dollar is going down, since gold is priced in the US dollar. So there's two ways of looking at it. But I've decided to start buying Bitcoin again, because it's, I'm reading a book on it now, I'll probably do a video on it, but it's been designed to kind of mimic what gold has done for hundreds of years, but it has the benefit of being electronic and to be used, easier to purchase and do financial transactions. You can use Bitcoin right through your phone and purchase certain items. I even watched a video in Japan where you can basically live off Bitcoin. And we're seeing Bitcoin emerging now in failed markets. And the overall value of Bitcoin now is 150 billion. I still don't know the long term of what's going to happen. Again, it could disappear, but I do have a chart showing it's not Bitcoin itself, it's kind of an exchange where you can buy Bitcoin over the markets, and it just reflects the price of Bitcoin. And we can see Bitcoin here was like quite literally dollars, $15, $16 back 2016. It spiked all the way up, I think to about 26,000, and then came all the way down, I think to just a couple thousand, and then another. So we get these big huge spikes, but we notice when it reaches a new low, a major low, it's always higher than the one previous to that. We had one where it got down to 5,000 just about a month ago, and now we're back up to 10, and we could see it double or so. But it's starting to, I'm keeping it a bit just because it's outside the system. It's I think similar to gold, but a modern form of it that can easier to exchange. Gold's not functional. You can't go to a store to shave off a few filings of gold and buy your groceries, whereas Bitcoin you can. Also, Bitcoin in May is going to have its next halving. That means every 4 years, Bitcoin reduces the number of Bitcoins that it will be produced. So now you've got a definite supply that's built in to the program to reduce supply over time. Plus at the same time you've got a bigger pool of that asset, and that mimics gold, and that gold has a lot of value, but the amount that can be added every year is only about 2 or 3%, because it's so rare and expensive to mine. And also now to disrupt the Bitcoin or to corrupt it, I think to change the blockchain you need like 4,000 to 6,000 megawatts of power to corrupt or take over the chain. I don't know all the details of it, but again, it's looking more like an alternative to the fiat money system. Again, I don't know, it could disappear, it could do whatever, but seems to me there's growing evidence that it could be an asset class to be looked into. As far as buying, again, being pretty conservative. Again, same story, just looking for dividend payers that I think can continue to pay their dividends. And I bought, get it up here, which I've had before. It's Smart Centers REIT, and it was up around $32, took a huge dive down to 16, and you can see here we wiped out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years, almost all the way back to 2009. And then since that time, the company's grown a lot, and their payouts has grown a lot, and it just seems like a good opportunity to buy. And I will show the daily chart on that, just to get a zoom in a bit. So I did miss the bottom on this one. Like I said, I sold off about $30. Because like I said, I don't ever want to take capital losses that would take away from my dividends that I had received, which I've talked about in the past. So I got below my average price, I got rid of it, and was watching it, got down to 14. Unfortunately, I really didn't get back into about $20 here. But that being said, I still made about 20% on that. Hopefully it stays above my $21, $22 price here, and I can continue to hold it. It's still